Welcome to Short View Trading. My name is Chris Watling. I'm the CEO, Chief Market Strategist of Long View Economics and Short View Trading. And this is your morning market hit for Tuesday, August the 27th. It's around 9 a.m. London time. So if you want to trade equity index futures, you want to go long or short, S&P 500, equity index futures, or FTSE, NASDAQ, DAX on that 1 to 2 week swing trader time frame, what should you think about? How should you go about doing that? What factors really matter? That's what we're going to dig into in this video. Well, the first thing you want to think about is what is the price action? What's the context of the market at this current time? That's critical as you start going about deciding whether to put in a long or a short equity index trade on. Because interestingly, over the last few weeks, we've had a pretty strong relief rally, a pretty strong wave 2 relief rally in the S&P 500. As you can see on this candlestick chart we're putting up in front of you now, from the August the 5th intraday lows, Monday, August the 5th, the market's rallied really pretty aggressively. And you'll see it's blown through a whole bunch of key resistance levels, starting with the sort of lows in late July, the intraday lows, then pushing through the uptrend channel and the 50-day moving average, and rallying very aggressively, as I said, over the course of the last 2 or 3 weeks. And the picture in the NASDAQ 100 is pretty similar, although not quite as impressive, as you can see from the NASDAQ candlestick chart. A strong relief rally, not blowing that much through its 50-day moving average though, and sort of stalling at around that level over the last few trading sessions. Now, as we're coming into last week, we're starting to flag up the idea that a number of our short-term market timing models were getting towards sell levels. And indeed, by the middle of last week, we had a sell pretty much across the board. Just take a look at the technical scoring system for the S&P 500 that we're putting up in front of you now. This aggregates a whole bunch of classic technical indicators, things like the RSI, momentum, all sorts of technical models that aggregated and scored to give us the scoring system for technical factors for the S&P 500 in this instance. As you can see, it got to strong buy at the lows in August the 5th. It was a bit early on to buy a week or so before that, and then back on to sell by the middle of last week. So very strong move in this model, as of course the market's rallying. Similarly, if you look at our risk appetite scoring system, equally on buy back in early August, and by the middle of last week, the scoring system's triggering a sell once again. And indeed, that was a consistent message across a whole range of short-term market timing models like the put-to-call ratio and a whole bunch of others that we publish each and every day in our daily risk appetite gauge. All of them reached sell by the middle of last week. And it wasn't just the short-term general market timing models. It was also the case when we looked at our tech-centric models. So look, for example, at the NASDAQ put-to-call ratio we're putting up in front of you now. Moved wonderfully from buy in early August back to sell by the middle of last week and started rolling over in the last couple of trading sessions. So the question is, what next? How should one go about trading this market? And indeed, interestingly, there was another classic technical price pattern signal last week. Indeed, on Thursday, key day reversals of a bearish type by the NASDAQ 100 and the Philly SOX index, the Philadelphia Semiconductor Index, dominated by Nvidia, AMD, Broadcom, and those stocks. Both of those indices put in key day reversals, as you can see this Philly SOX candlestick chart we're putting up in front of you now. Now, there's no sort of 100% hit rate from any technical price pattern, but a bearish key day reversal, which is defined as an index that opens above its prior intraday high and closes below its previous intraday low. So it engulfs the price action of the prior day and trends down. And that happens at the end of an uptrend in this instance for a bearish key day reversal, a downtrend if it's a bullish key day reversal. That price action is pretty interesting. As you can see on the Philly SOX chart, that's worked pretty well for a 1 to 2 week trade on a number of occasions in the last few months. So last Thursday, we had that in the NASDAQ, we had it in the Philly SOX, coupled with what you saw on the short-term market timing models. And it starts to be quite a powerful message for moving short the equity index futures of the tech area of the market. But to see how we're playing it today, how we're trading this market, to get an update of our daily models each and every day, an updated commentary on how we see the market price action, and our explicit recommendation on whether to go long or short equity index futures on a 1 to 2 week basis, please take a free trial of the daily risk appetite gauge, just click on the link below and we'll send it to you for a bunch of trading sessions for free. Or if you're a subscriber, it'll be in your inbox around 9 AM London time, each and every business trading session. So what are we watching over the course of the rest of this week? Obviously, we're already into Tuesday, but there's still a bunch of stuff going on. There, of course, is Nvidia's earnings coming out on Wednesday after US market hours. That is critical. Key stock, of course, the biggest stock in the Philly stocks, one of the biggest stocks in the index, full stop. That is key to market thinking. Volatility is likely to follow that, so that'll be watched closely. Secondly, there's a whole bunch of inflation data out over the course of this week, particularly towards the back end of the week. We've got German inflation, first estimate, French, Italian, Eurozone, and then on top of that, we've also got US PCE deflator on Friday as well. So lots of updates on inflation, they'll be watched closely. And then finally, there's a bunch of other stuff going on in the US. We've got a Chicago PMI, the back end of this week. We've got Conference Board consumer confidence, and there's also a whole bunch of earnings out of China. It's a bit of a feature this week. A lot of the Chinese banks reporting earnings. That, of course, is critical as well. How's the Chinese financial system looking? That'll give us a bit of an update on that. So that's it from us. That's your morning market hit for Tuesday, August the 27th. Thank you for listening. Please do like and share these videos on YouTube and subscribe to our YouTube channel, or follow us on Twitter, LinkedIn, and or Facebook. Thank you for listening. Stay safe. Trade well.